Good morning. This is Butch Shorak, Options University. It's Monday, August 27th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the week that was as far as economic announcements, and basically what we'll see is that there was very little there all week until we get to Thursday morning jobless claims, which take place every week, missed again. And other than that, there was not a whole lot that took place during the week that was. Looking at the week that is coming, we see that we are loaded with information. This morning at 10:30, we've got the Dallas Fed Manufacturing Survey. Tuesday, Case-Shiller. Tuesday, Consumer Confidence. Tuesday, Richmond Fed Manufacturing Index. Going into Wednesday, GDP can move the market. Pending home sales, which hasn't been moving the market. Jobless claims on Thursday morning, just like every Thursday morning, which has missed the last 2 weeks. We'll find out exactly what kind of unemployment numbers we had last week in our great economy. Personal income and outlays, and then finally Kansas City Manufacturing Index. Friday, not to be left out this week, is going to show us the PMI, consumer sentiment, and factory orders from 9:45 till 10 o'clock. So we have a week that it was and a week that's to come, and the week that's to come has plenty of economic announcements, plenty of ability there to move the market if the market's ready to move. Last week in August, the week after this, we're going to be looking at a four-day trading week with a holiday on Monday, so it certainly should be an interesting week as we wrap up the month of August, which has certainly been a rally month in this election year, which doesn't greatly surprise us. Next, let's take a look and see what happened to the SPX during this week. The trend, as we see, continued in an uptrend, and continuing in that uptrend, we see that we suddenly this week pulled into a down cycle as we got lower highs, lower lows, pulled back to that 1406 and bounced a little below it, getting that support right down there at 1398. Have not hit the 30-day moving average yet, as we had quite a week last week with our first pullback in 13 trading days, which is a long run in a summer market. Looking at a little closer look, notice these are marks that were left on the chart. We see, looking at Monday, Tuesday, Wednesday, Thursday, and Friday, higher highs, higher lows on each day of the week. Had news on Tuesday, got a big bounce, went up and hit that resistance line, and then pulled back the rest of the week as it could not hold those gains. Got down to 1398, and remember, we've got a target down here at 1386. Until we change this cycle, that's where we're headed. We do have a cycle that is a down cycle in an uptrending market. Let's take a look and see if the Dow followed along in the same manner. Looking at the Dow, we see exactly the same kind of move. 13 days up in a row, got a new high for the year, and that was the turning point on Tuesday when it came back, pulled to the 30-day moving average, and then the Dow gave us a bounce on Friday off of that 30-day moving average, which may have caused the whole market to rebound with that technical move. Looking at the NASDAQ, we see the NASDAQ didn't give us the same kind of look. It did bounce up during that 13, but notice this area where it had a hard time moving up did pull back last week with the S&P. Then looking at the Russell, we see that again, we didn't even get out of the trading range on the Russell, as the Russell remained in that trading range that it's had since July. So see a bit of a pullback. Russell is often important for us to watch, as it many times will give us a one-day lead on where the other indexes are going. Looking at the week, we can see that looking at the indexes, looking at the Dow, NASDAQ, S&P, and Russell, we see the change was all negative numbers, ranging from minus 1.3% on the Russell, down to 0.2% on the NASDAQ, which pulled back the least, had the most relative strength. S&P had a minus 0.5%, and the Dow had a 0.9%. Year to date, look at that, all big big positive numbers for the indexes, as the summer rally certainly provided for us nice health in it. And showed us that we could approach those yearly highs that we had gotten earlier. Looking at the VIX, no big surprise. Market pulls back, VIX pulls up, but look at the range we're trading in. Not a whole lot of fear or volatility in the market at this time. Let's take a look at some of the sectors that are sitting in there in the market. Let's take a look at the bonds, and we see that as the market pulled back this week, had a little bit of a pullback. The bonds pulled back into its normal summer trading range. We had a dip, didn't make it to the 200-day moving average, as the bonds have shown great strength in the last 2 years. Let's next take a look at XLF, our financials. See that it broke out with the overall market. Not a big surprise, as a rally without the financials really isn't a rally at all. A little bit of a pullback in the financials following the overall market gives us potential. If you see the market begin to move up in general, you can expect that the financials will move up, and potentially some money to be made for you option traders in that ETF XLF. All right, let's take a look at oil. See that oil continued on up. Very little pullback in oil. And then finally, we're going to take a look at gold and see what our safe haven did, as we had a little bit of a down cycle in the overall markets. Oh, no big surprise. Safe haven had money go into it as it broke out for its recent high in the last 3 months. So the sectors did as would be predicted of them, and we see that the market is holding up just fine. All right, now let's take a look at the spider, that ETF, which shows us very much the same type of graph that we get out of the SPX. But what I want you to look at is look at this. Look at that volume. Absolutely pitiful in the month of August, as we had a rally on very low volume. So don't be surprised and be concerned about the month of September, which many times is our worst month of the year, setting up for the best quarter of the year, which is the fourth quarter in this market. With that thought in mind, those of you that are gold members, stick around. We'll take a look at our stocks to watch and look at some of those charts and see how they held up this week relative to the overall market. So with that thought again, this is Butch Shorak, Options University, Monday, August 27th, 2012. Bit of a pullback in our summer rally, and we'll see whether it holds. Monday will be a key day for us as we see what happens. Look at the opening high, opening low to determine which way the market is moving. And thank you for being here. To our gold members, welcome back, and let's take a look at the forecast for the week. Here we are, we're sitting here on Monday morning, and we see that we are in an uptrend and we are in a down cycle, getting lower highs, lower lows. Watch this morning's open. Take a look at that first hour, see and look at the opening high, opening low, and find out where we are trading relative to that opening high, opening low here this morning, and might give you some indication of where the week's going to go. We certainly have a tremendous amount of announcements this week, which could affect the market, but our targets are first 1417, then 1431, and then ultimately 1440 if we continue on with this summer rally. Let's take a look at the stocks that we've looked at for the past week. Taking a look at Amazon, we see that it had great strength relative to the overall market. If we do have a bit more of a pullback, watch and you can buy pullbacks, whatever bullish strategy you want to use with your options, certainly one of your choices. All right, Amazon, certainly a stock to watch. Now let's look at another one of your favorites, Apple. Look at the power that this stock has showed, and big news this morning as we see the overall market headed up. Let me take that over. As we see Apple headed up and had a big settlement with Samsung, where it won the court case during the weekend. So big news for Apple this way. Watch for a potential bang off of that. Autozone going up absolutely nowhere. Having trouble with that 200-day moving average. If the market pulls back, look for Autozone to pull back, looking for that 355 mark. Maybe a good spot for you to consider some kind of vertical call credit spread in order to pull money out of it. Watch the overall market to determine your timing on that. All right, now let's take a look at CMG, going absolutely nowhere. Can't seem to clean above that diagonal line I have drawn on there. Its target right there below 280. If the market pulls back, watch for CMG to pull back. Do earnings count? You bet they do. Look at that volume and that punishment that CMG has gone through. Next, let's take a look at Google. There's only one direction, that's up. Great relative strength, the overall market in the last week. Look for the breakout from this high, which is right there around 680. On a breakout, you certainly could consider trying to pull some money on the bullish side on Google. Next, let's take a look at GMCR, sitting up there at resistance on a breakout, may have some room to the upside. Take a look at GMCR, is having problems pulling back. On a pullback in the market, you might expect this to pull back a little also. ISRG, sitting at a crucial zone at that 200-day moving average. If we get a pullback in the market, look for this thing to retest 470. With the market heading up, we'll see if we look for a bounce. So look for higher highs or lower lows on ISRG to pull some premium out of ISRG. Next, let's take a look at MasterCard, going nowhere. Might want to look at a Condor. Do your call side up there, put side down there. Doesn't seem to want to go anyplace very fast. Nice sideways trend on MasterCard. Let's take a look at McDonald's, very much the same as MasterCard. Might want to look at Condors. Be careful of the put side in September, as it is a time when the market does have a tendency to show us some ugly, ugly times. One of the worst months of the year. Let's take a look at Nike. We see Nike is just not doing it, not going anywhere, and certainly showing us nothing. So take one of your strategies for a stock that does absolutely nothing, and that's where Nike fits in at this point. Priceline had a nice little move up, broke through its previous high, still has not filled the gap. 200-day moving average above it. It will move where the overall market moves, showing a little relative strength in the market, but don't be surprised if this thing goes back down and tests 560 on a major market pullback. And finally, let's take a look at W.W. Grainger, one of those stable companies in the overall market. And we see it's trading within its zone. And you know what to do with stocks that trade within their zone, sitting on a 30-day moving average. If the market pops up, look for a higher high, higher low. You certainly got that signal on Friday with a higher high and a higher low. W.W. Grainger, one of the stocks to watch. So as you can see, it's interesting. We're kind of at a crossroads this week, the last week of the month, and September coming up, which could be the worst month of the year. And we also have a 4-day trading week coming up in September as we come into one of our holidays. So with that, this is Butch Shorak for Options University, Monday, August 27th, 2012. Thank you for being here.